If you've been watching the markets lately, you've probably seen MicroStrategy's stock name pop up everywhere. Some call it the ultimate Bitcoin play. But here's the truth. In September 2025, MicroStrategy is one of the riskiest stocks you could buy. And today I'll break down exactly why this so-called tech company might be setting up investors for disaster. First, let's get one thing straight. MicroStrategy is not really a software company anymore. On paper, yes, it sells enterprise analytics tools. But in reality, the company has transformed itself into a leveraged Bitcoin holding vehicle. As of now, nearly all of its balance sheet revolves around Bitcoin purchases. If Bitcoin rises, MicroStrategy stock soars. But if Bitcoin crashes, the stock gets obliterated. That's not diversification, that's just one giant crypto bet disguised as equity. Here's where things get even more concerning. MicroStrategy didn't fund its Bitcoin obsession with profits. It funded it through massive debt and dilution. Over the past few years, the company has issued billions in convertible notes and repeatedly sold new shares just to keep buying more Bitcoin. Translation: every time they chase the next rally, regular shareholders get diluted. Your slice of the pie shrinks, while the company piles on more debt. Imagine investing in a business where management keeps pawning away future growth just to gamble on one volatile asset. That's exactly what's happening here. Now let's talk numbers. Even if you're bullish on Bitcoin, MicroStrategy's current valuation doesn't make sense. Analysts point out that the company's market cap has often traded at a premium far above the actual value of its Bitcoin holdings. In other words, you're paying extra for a company that owns Bitcoin when you could just buy Bitcoin directly without the middleman risk. So ask yourself, why overpay for a proxy when you can own the real thing? Let's not forget, MicroStrategy was once a respected business intelligence software firm, but today, the core software business barely moves the needle. Revenue growth has been stagnant. Competition in analytics is brutal, with giants like Microsoft, Google, and Snowflake taking market share. Yet management seems more interested in making headlines with crypto than in fixing their actual product strategy. This means if Bitcoin ever enters another prolonged bear market, MicroStrategy has almost no fallback business to protect investors. And finally, let's bring this into the current market context. AI stocks may be in a bubble, but Bitcoin is also under scrutiny as regulators tighten policies worldwide. Interest rates remain relatively high, which makes debt finance bets like MicroStrategy's far riskier. If Bitcoin volatility spikes, as it always does, MicroStrategy shareholders are the ones who get whiplash. In September 2025, you don't just need good companies, you need resilient ones. MicroStrategy simply doesn't fit that bill. So here's the bottom line. MicroStrategy isn't really a software company anymore. It's a leveraged Bitcoin ETF with extra risks like debt, dilution, and fading fundamentals. If you want Bitcoin exposure, buy Bitcoin directly. If you want a real software growth story, look elsewhere. But if you buy MicroStrategy hoping for safety or long-term stability, you're setting yourself up for disappointment. In September 2025, MicroStrategy is a stock investors should avoid.